Sports card prices for many cards will rise as we head into 2025, and I believe into 2025, but there's a bigger picture reason for that. It's not because we're all smart or, there's people out there that know better than others. It's pretty simple, actually. I'm going to share my opinions here. Stick around. What's going on, sports card hobby family? It's another day. It's another sports card video. A little bit of a financial talk video today. I've been watching some of this over the weekend, just trying to gather as much information because I have a feeling about kind of what's coming as far as the global economy and especially the U.S. economy type stuff. I'm going to talk specifically more about the U.S., but I think that it kind of reverberates. Is that a word? I think it is. Across the globe. There's a lot of things that are very similar. It's happening in the US, it's happening in a lot of places. So we're going to talk about this. Before I get started, huge thanks to today's video sponsor, COMC.com. 35 plus million cards in the database. It's all the fun. You got to check out COMC baseball, football, basketball cards, hockey cards, Marvel cards, all sorts of hidden gems on the site. You can grade cards through COMC. It is a world of fun, so make sure to check out my links down below to take you there and get started. Also, don't forget, if you're new to PSA, $25 off your first submission with SCD25 code on the shipping and billing screen. Take advantage. If you've never shipped with PSA before, now is the time to check it out. I've got links down below. Take advantage. All right, when you have a feeling, like you have a thesis, a hypothesis you're building up, and sometimes you just are looking for confirmation of that feeling or those thoughts. And this is kind of what happened when I watched a great video, and I'll put it down below, by Clear Value Tax. This guy, I think he's got a couple million subs on YouTube, but just speaking common sense financial stuff. But I really like his outlook, and it kind of, again, it was something that I've been feeling. And so watching this video and some of his other videos kind of gives me more conviction on this particular topic around inflation and hyperinflation in the U.S. economy. Now, let me start by saying, of course, I'm not an economist. I don't have an economics degree. When it comes to economic affairs, I do have a business degree, so I'm interested in the subjects, but I am not zero focused. And I had Econ 1 and 2, but I am not some sort of an expert. Now, you could argue Janet Yellen. She went to Yale, and she is in one of the highest offices in control of all of this stuff, and she didn't see the inflation coming. So I don't know. I don't want to speak against experts in quotation marks, but essentially what this guy was talking about and where I think that it's going to affect sports cards, I think it's going to affect specific sports cards. And you have seen kind of more of a rush into quality. You've seen consolidation into better cards, kind of moving off maybe cards that you're like, don't really like, or you're thinking like, I don't know if these are going to hold value long term. For me, I've got my Breeze PC, my Drew Brees PC. I don't have that to retire off of. That's just, I'm a diehard New Orleans Saints fan. He's the best Saint to ever play. And so that's just kind of a fun PC. But as far as money is concerned, I've got Tom Brady and I've got Michael Jordan are really kind of my focuses. And then on the non-sports side, I've got very important specific cards on the non-sports pop culture side that have significance, hobby significance over time. So essentially what this guy is getting at in his video that I just absolutely agree with, and we're going to talk about kind of just the U.S. and the trajectory of the U.S., is that we are in a spending, obviously we have a huge spending problem. Our deficit is like $34 trillion and growing. I think we're going to be paying $1 trillion a year in just interest here soon, just interest on the debts, on the bill. So if you can imagine, the spending just continues to rise, and it doesn't matter which political party we're talking about, they both spend just on different things. So like spending is rising, and of course, the way that the government has been trying to fix that is by printing more money. We got to print more money, which of course you put more money out into the universe. What happened? We just saw $4 trillion over the last 4 or 5 years go out, and now eggs are $5 for a dozen and all that stuff. You put more money out in the system, more money being spent, everything gets inflated. Well, now over the last couple of years, of course, the Federal Reserve has been raising interest rates to curb inflation, get people to move that money onto the sidelines. And hey, look, if you've got huge money, 5% in the money market account is crushing it. You're happy to put a few $1 million, couple $1 million, just sit it in the money market, let it do its thing. You have very little risk. I mean, that's glorious. Well, what's happening now? Well, now unemployment's starting to kind of move up. There's some signals like, we got recession signals coming. So what did the Federal Reserve do? pull back, cut rates by 0.5 point. That, of course, means that money is cheaper to borrow, not just for consumers, but for businesses. And it's just more pro-business, business friendly to where, okay, maybe they're going to be a little bit more bullish and hire more because, hey, we're pulling interest rates down. And that seems to be the trajectory. And a big reason for this is the U.S. literally cannot afford a deep recession. And you're probably wondering, like, well, why is that? Why can't the U.S. afford it? Like, what can we do? The U.S. needs the tax revenue. So we cannot afford for businesses to lay off half the country. We can't afford it. We're already in a deficit every year from tax revenue, and the spending keeps going up. So you've got more spending, tax revenue can't keep up. And so if, half the country, let's just say, is laid off, not paying any taxes in, well, that's a huge problem. That's just, now you're in that's a real compounding problem. Additionally, the Federal Reserve said, hey, if things get a little bit too crazy, we'll fix it. That's what the Federal Reserve said. Well, how are they going to fix it? We know how they're going to fix it. They're going to print more money. They're going to print more money. They're going to lower interest rates. We're going to go back down to more, cheap to borrow money. And so what happens when it's cheap to borrow money? It means that there's going to be a lot more money flowing back into the system. It also means that if you got huge money, and you don't even have to have huge money. If you've got $1 million in the bank, you're upper middle class, whatever, high net worth person, semi-high net worth person, and now you're back to getting 1% in the money market instead of 5%, what are you going to do with your money? You're going to move it into something else to where you can get a better return. And is that going to be sports cards? Maybe some, but again, I'm talking about very specific sports cards. I think it's going to move to quality. I don't think it's going to be buying, 1,000 PSA 10 base prism cards of XYZ player Wimby or whatever. So cards are naturally going to inflate, I believe, as we get to 2024, 2025. And this guy kind of makes an interesting point to where it's just a race to build assets because, of course, our US dollar will continue to decrease in value over time the way that it has. And we see this globally too. You can look at the pound in the UK. It's very similar. Look at how it's gone over time. It's diminished in value over time. It's why a lot of the crypto bros and the Bitcoiners are saying like, hey, look, your US dollars are not going to be worth anything. You should have it in Bitcoin for the Bitcoin people or whatever. So to me, and again, it's just one guy's opinion. I can't see the future, not financial advice and all that stuff. It kind of seems like a lot of the stocks, a lot of the real estate is going to stay high. And I thought too, the same thing. Well, I think we're going to come up on a big crash. But if you kind of look at what's happening though, you could make an argument that things continue to kind of like the asset prices continue to become overflated because there's just more money in the system. And it's just going to go into stocks. It's going to go into real estate. It's going to go into, high-end sports cards or whatever. It's going to go into alternate type, investment type stuff, even crypto stuff. It's going to probably move these things up because money's going to be cheaper to borrow again, and interest rates are going to be lower. And that's going to be kind of an interesting dance that the Federal Reserve is trying to do. But the Federal Reserve does not control government spending. They don't have any vehicle to stop it. They have to react to it. The Federal Reserve has to react to the inflated government spending that just continues to bloat. Now, counter to this, you have like Warren Buffett and Berkshire Hathaway that are sitting on more cash than they've ever sat on before. And I guess my question there is Warren Buffett and Berkshire, are they waiting for a crash that they think is going to happen, like a recession? Or are they just they have their money in cash while it's still kind of good, while interest rates are still high, but eventually probably going to move down. And as rates move down, then they're probably going to move into assets again, more assets. They're just going to kind of move in and out where it makes sense for them. Obviously, those assets being stocks. So if their money is just sitting there in the bank and it's not making as much, now I'm pretty sure that Warren Buffett and those folks get a much better deal than the general public when it comes to the rate on their money. But I think that that's going to be interesting to watch. Does Buffett okay, let's say they keep on moving interest rates down, we go back to a negative Fed fund rate. Does he go, okay, go back in, we're buying more Apple or we're buying more of whatever. And again, is it going to create another kind of a series of booms in specific cards? Now, I will say though too is I think that this makes it even more vulnerable because a lot of us, I think this is going to be kind of a race just to kind of make sure that, hey, yes, you've got cash on hand for emergencies and that sort of stuff, but you also have solid assets. I think that's going to be like the biggest thing is, do you have solid assets? Are you building assets? Are you able to get into buying a home? Are you able to build out your stock portfolio? Are you able to add some cool, collectibles pieces that are kind of important in the hobby or that you feel pretty good about moving forward. Michael Jordan, I don't think it's coincidence that Michael Jordan just being now probably the most collected athlete on the planet, just hobby wide because he's got so many cards over a period of time. He's got lower level, he's got $1 cards, he's got $1 million cards. And he's an example of this. I mean, outside of Shohei Ohtani right now, prospects, it just seems like more and more people doing less of the prospecting. I mean, really, we're talking about Wemby and Shohei, but I don't see a lot of people that are buying into prospecting on second, third year rookies that might work out later. I think it's going to be really important moving forward that, as we have collectible stuff, and I understand, look, if you're buying just like binders of cards, this is just a hobby, then this isn't necessarily for you. I've got stuff like that too. I'm buying $50, 89 score set, football in a binder. I'm not buying that as an asset. I'm buying that for fun. So we're differentiating the two things here. But if you're spending $2,000, $5,000, $10,000 and up on a singular card, you're probably putting a lot more thought into what that's going to be. We had talked about yesterday the $50,000 one of one, the triple, the Topps Now card with LeBron, Durant, and Curry. I am really interested to see what that does because if you're buying in, it's just so much more important in my opinion. And again, one guy's opinion. But to me, if you're putting big money into something, it's more important than ever that you feel good about that thing holding up. It's got to have a story to it. And I mentioned, that card compared to Willie Mays rookie card, compared to other LeBron cards, other Curry cards, other Durant cards. And to me, again, everyone could spend their money however they want to, but $50,000 is a lot of money to get into some good assets. Not even just like in the stock market, but in the collectible space. So just a lot to think about, just stuff that's been on my mind I wanted to share with you all. And again, everyone can hobby however they want to hobby. The collectible stuff for a lot of people is just fun stuff. It's not considered like, a lot of people are like, I don't really care if this holds value or not. And that's totally fine. This is your side hobby thing that you're just enjoying. So I'm not necessarily talking to folks like yourself if you fall into that bucket. But I know there's also a lot of people that they're buying, they really love a specific card, and it might be an important hobby card, and there is in the back of your mind a thought of like, man, I hope this kind of holds value, store value, and maybe it does kind of increase some over time. That would be fantastic. You enjoy a great collectible, and then it does happen to move up over time. Something to supplement all the traditional type stuff that you've got, the stocks, bonds, real estate stuff. So anyway, guys, let me know your thoughts in the comments below. Do you think we're going to a more of a hyperinflationary type environment where that's just going to be the norm and we just kind of have to accept the fact that stuff is going to be more expensive? Is that it? Or do you think there is going to be some sort of event to where there's a crash in, prices? And I would say, not even just in collectibles, but maybe real estate prices and maybe, the stock market has just been kind of moving up, where it's like we're always at all-time highs, it feels like with the S&P. Is it going to take a big haircut in 2025? Will a recession actually happen, or will the government kind of step in and do what they usually do and stimulus our way out of one? All right, friends, stay healthy, stay awesome, and I will talk to you again later.